I've taken a long after the price has taken the low of this doji pin bar candle. We formed this bearish engulfing candle, and we retested the low of that candle, retested on the 5-minute time frame. I've gone long as we were retesting that level. I'm anticipating some kind of a bullish engulfing candle or series of bullish candles now, or just price to continue up into this gap right there, and then potentially fill out the rest of these in session highs. I exited that trade at break even because price wasn't doing what I was expecting. I was expecting price to start moving up. However, we came down. We actually came into the 50% off this 240 fair value gap, and after I entered the trade, I noticed there was an order block, daily time frame order block right there, which also happens to be at the start of the second fair value gap on this 60-minute time frame, which is a much better location to go long than going long where I did. So I wanted to get out of that trade, and then I saw this candle, this bullish engulfing candle, which took out the highs and the lows of previous candle just before that order block. The low of that candle is just another liquidity level for price to come into. That's how I see that candle. And after this, now if we come down into that order block, I will go long, and we formed this nice little range right here, accumulation, and price, depending on how price drops down, I will go long. But yeah, after seeing this bullish engulfing candle in this location, the context for me is that we're going to continue pushing lower and find some kind of support, hopefully at this daily time frame order block, which also happens to be below at the start of the 60-minute fair value gap. So we'll see how that plays out. We're still in London session at the moment. We've got news at 3 p.m. today, and it'll be good to see how price reacts off that. We after that 15-minute bullish engulfing candle, it looked like we're going to continue higher up, but to me, that suggests we're not going to go higher up. In fact, we're going to come lower and take out the low of that candle first before going higher. Why not do that right on the 5-minute? We've already made another low that we took out the swing off, but it does look like we've come into this bearish fair value gap, and we will continue lower. We'll see. I exited that euro dollar trade this morning. However, pound dollar, like I said in my pre-market analysis this morning, that I wanted price to come into this daily time frame fair value gap, which is right there in this bullish leg, and I've entered a position as we have come to that level after the PMI news at 3 p.m. UK time, and I've essentially just aggressively gone long after price had tapped into that fair value gap's 50%. I have my stops below the fair value gap, and targets I'll see how price reacts at that level, and then it will be decided on that. Ideally, I do want to see price come into at least this level of resistance right there, but we will see. It's also good that price put in this candle, this bearish engulfing candle that took out the highs of the order block and then the low. Ideally, after seeing this candle, you'd want price to continue lower, but it's because it's at a certain POI that I'm actually going long in this. We might see price consolidate around this area for a while. We might see on the 5-minute price pull up, retest, take out the low, and then continue higher. Anything can happen, so it's just a matter of watching and waiting for price to play out. Honestly, it's a pretty good trade. We came in to this level of support or point of interest, which is the daily time fair value gap, after we put in this market structure shift, after taking out these lows, and price has essentially pulled into that daily time fair value gap 50%, which also happens to be the start of this inverse fair value gap right there on the daily time frame. So it's a pretty good location to go long, and it's come at a good time during news where price has been ranging and then decided to tank, and now I do predict price to find strong support around here. I wouldn't say strong supports, but somewhat of a support, because weekly time frame we had this bullish engulfing candle last week. That to me shows we could potentially push back up to these highs above last week and tap into that fair value gaps 50%. So we'll see how that plays out. So this is where we currently stand with pound dollar. This is today's Thursday, 5th of December. As I was anticipating or predicting that we could potentially come up and take out these highs, it is playing out as I was expecting, right? However, predictions are one thing, and being able to stay in a trade and hold that trade for all of this consolidation is another thing. So of course I didn't stay on that trade for too long. I exited it very early, but I do want to do a post-market analysis just to break down my thought process behind the trade and my trade management and why I exited that trade, just all the reasons and what I could have done better or what I could do in the future to enter those trades less aggressively, or if I'm entering those aggressively, how I can manage the trade. So I entered quite aggressively on the at the 50% of the fair value gap on the daily time frame. After price held that level, price was putting in this bullish engulfing candle on 5 minute, and I entered there. And then straight after, price dropped. Honestly, it was really close to taking out my stops, but I held that trade because I would have re-entered had my stops been taken out. And then we get this, right? Price comes down, but in this bullish engulfing candle, tries to go below that and then fails and then continues higher, and then we get that pullback essentially, or eventually. And what I did, to me, the main thing that happened was, firstly, I re-entered another trade somewhere around here on 2 of my accounts, and as that pushed up, I exited that trade. Like, I risked 0.5%, I believe, and I ended up for 1.1%. I also, because I traded here, and as price moved up and my original entries price moved in profit, both of them closed out my profit because my account got funded. So 2 of the accounts I made profit, and one of the other accounts, my main account, my personal account, after the 1 hour candle, after this candle closed, I was quite scared to stay in the position, and I exited at 0.2% profit. Mainly because it was Monday, and although I was bullish for the week, I wanted to enter the trade on a Tuesday rather than a Monday, and because it was getting later in the afternoon. So this is London close, right? This is London close, 11:12. This is 5 p.m. UK time. I wasn't really predicting price to continue higher up, but we still got that market structure shift, pull back into the 50% discount, and then push up. That's another way to enter that trade if I wanted to enter a trade in the future, because of the location it's at and the time it was. And also not be scared of candles like this at certain locations like this, like a strong point of interest. The initial trade was way too early, although yeah, it tapped into that 50% of that fair value gap. I ideally should wait for price to drop below the initial hold and enter somewhere around here. I don't have to wait for price to give me more confirmation, just need manipulation of the low of what was formed, and anywhere around here would have been more than enough for a good trade. It's just that I was really early on a Monday. Then eventually price pushes up, taps into this order block, this resistance level, and finds resistance, and then it consolidates sideways. On the 4 hour it's clearer, right? Whenever price puts in this inside bar candle after a bearish candle, especially with a wick like this, I wasn't expecting price to come back down to this low. Like, even though I wanted price to come down to that low because that's what my plan tells me to do, I wasn't expecting price to do that because of this inside bar, pin bar, bearish pin bar. And then we took out the low of that candle, and that was honestly enough evidence to suggest we might hold there. Then next day we had the failed swing followed by market structure shift after rejecting this fair value gap on the daily time frame below strong liquidity level in a bullish order flow on the weekly time frame. Well, short-term bullish order flow after this bullish engulfing candle, after rejecting these lows. And here I was expecting price, well, I didn't really know what price was going to do. I didn't want to trade the 618 retracement because of the fact that although we got bullish engulfing candle last week, overall order flow is bearish, quite a strong bearish order flow. So yeah, I didn't really want to go long here. We came up, rejected this high above that, below this fair value gap, and then price just drops. And this would have been a good trade because price comes down on Wednesday, takes out the Tuesday's low, and provides, well, this pin bar to go long. Right, if you look at on the daily time frame, we took out Tuesday's low on Wednesday. Tuesday happens to be an inside bar candle similar to the one we just saw on the 240 time frame after that bearish engulfing candle, which is followed with a bullish engulfing candle after taking out Tuesday's low. So that's a good way to enter a trade like that on a Wednesday rather than on a Tuesday. If I don't get a trade on Tuesday, there's an opportunity on Wednesday. Yeah, sorry, this is the Wednesday right here. This is just Tuesday. It's not taking out Monday's low. This is just Tuesday taking out some swing lows and pushing up, closing above, and then pulling back. And then on Wednesday we took out this low with this strong pin bar. Honestly, wouldn't have known what to do there. We had this on the 5-minute strong inverse fair value gap. That price actually comes and fails to even touch the 50% off multiple times. Right, even on the 15-minute, same thing. No, 15-minute, we tap that 50% a couple of times, and then we push up. And it seems like price has not come below that, and it does not look like it's going to come below that after holding this low. This significant drop, held, boom, not going to come back down again. So yeah, that's the potential plan to trade in a bullish order flow if I wanted to trade on a Wednesday. You know, Tuesday's low were taken out, some other lows were taken out, 50% off that fair value gap on the daily time frame, held again. Some strong inverse fair value gaps being held, and then price just pumping up. Overall, okay trade, early entry, location good because honestly overall context gave me confidence to stay in this trade and get almost like 1.2R overall or 1.3R. So I'm happy with my entry. Just could have been better in terms of waiting a little bit longer to manipulate this order block and then entering after that. I usually don't like entering after the market structure shift has already happened unless it's certain patterns, because of the fact that to me it's just price has already made this move and it could easily just come back down. At least if I'm entering at the low where I predict price is going to find some reversal, I will enter, take some targets, and then let the rest run for a bit. But yeah, that's pound dollar, and we're just waiting for NFP now to come up and take out this high fair value gap, weekly fair value gap, this daily fair value gap, and see how price reacts around that level. Maybe we'll find potential shorting opportunities after that.